Okay, so hopefully this part will just be a little more direct, and I am just going to go down through the chart of accounts. I said yesterday on what we posted, so I don't if you printed it out, if you didn't print it out in color, it might be an issue, but what we actually posted on the website, I did color code some of these. So what we're looking at today, this afternoon, is the ones that are in green, that are highlighted in green. Again, when we post the official one on our website for the chart of accounts, it's not going to have all of these in, but this is just so you have kind of a working copy that you can refer back to if you have questions about it. So here we go. The first step, and one of the really, really big points that we are trying to make with this transition is that we are going to stop using LOIT, CAGIT, COIT, CEDIT. We're going to start emphasizing LIT. So we had some discussions about, do we need to change? Should we go with new funds? I mean, there's no perfect way to do this, and we're just hoping this is going to be the easiest to transition into LIT and start thinking of it as LIT. And I do want to point out as a corollary with that, because Shannon and I have received a lot of questions, even under LIT, when we're talking about certified shares in the expenditure rate or economic development or public safety, the uses of those didn't change. So the way you're used to using them, your capital improvement plans, your public safety plans, those still continue. It's just under LIT now. Okay. So the first one we have highlighted here was the CAGIT special legislation. We are no longer going to be using that fund. And also, if you go down to 1113, the CEDIT special legislation, and the 1120, which is COIT special legislation, those funds will no longer be used. And I know you have balances in those, but we have established, and I'm going to change this on the final, the LIT, and instead of special legislation, we're going to change it to special purpose so it matches how it's being discussed by DLGF and Auditor of State. So it's going to be 1114 is going to be LIT special purpose. So you're going to need to move, you would only have, well, you could have had two. You need to move your balances, if you have a balance in your special one, into this new LIT fund, but you will continue to use it for the purpose that it was established. So that won't change. If you're working on a transportation project or a jail project or whatever you had it set up for, or paying debt off for that, that will continue. It's just going to be moved to this new fund and called LIT, special purpose. Under the 11.9, the 11.10, the CAGIT County certified shares, and the 11.20, COIT, or no, 11.21, COIT County distributive shares, those funds will cease to exist. That decision, we sent out a memo earlier in the year. Your certified shares, part of your expenditure rate, will go into your general fund. So starting in 2017, when you receive notice that you have certified shares, those are going to be posted to your general fund. I think there were some questions from some other units that maybe they're, I don't know if this happens with counties, but they might ask you. The reason we went through the memo of the reasons for that. The reason we're putting it in general fund is because it is an unrestricted money source. You can use it for any purpose of your county. If a unit has restricted it, if they were using their former COIT for a debt, pledged it to debt, they may be moving it to something other than general because they've put a restriction on it. But if you have not established it as something else, it's going into your general fund. It's part of your general fund revenues, and it's going to be part of that budget. I would probably recommend, if it were me personally, moving any existing fund balance you had in the CAGIT certified shares or the COIT County distributive shares back into your general fund just to clean it all up. However, we will not take audit exception if you've set up your budget to disperse out of those two funds to clean those out as of this year. but you will not be putting any new revenues in that. So you can make a county decision how you want to do that. Okay, so then where do we go? Wow. Okay, the 1112 used to be your CEDAT fund. I left that as 1112. I didn't see a need to change it, but we're going to change the name on our standard chart of accounts to Lit Economic Development. But it is exactly what CEDAT was before. It is economic development. You should have the economic development plan. You're still going to follow that, that plan in using it. We're just going to call it Lit Economic Development now. And in the same manner, the 1170 used to be Lowett Public Safety, so now we're going to call it Lit Public Safety. But again, whatever your original use, whatever you set that up for, you're going to continue to use that for public safety purposes. So those are the changes in your general and special revenue funds. So you go down to the settlement funds. Okay. So the 6004, that was a Lowett Property Tax Operating Levies Replacement Fund. As I understand it, and I am not the expert on this, that will continue to exist, so we renamed it to LIT, Property Tax Operating Levies Replacement Fund. And the 6006 used to be Lowett Stabilization. We're renaming that LIT Stabilization, but we left it with that fund number. So if you have that fund, you will continue to have it under a new name. If you never had that fund, I don't think you need to worry about it. The next set on here, the 6101, 6102, 3, 4, 5, and 6201 are the ones that Fred was just talking about, which they're really just going to go into hibernation for a year until they do their cleanup on that. They're not going to put any new revenues into that. They're going to be there, and some of them will have balances, and you'll get direction on what to do with those. But starting with January 1, the 6203, it's a new fund, is going to be your local income tax property tax relief fund. So you'll have one fund to put that in there. Okay, and because you are the county, you get to distribute for the LIT to the other units, including yourself, but also the other local government units that receive any distribution of LIT. Formerly, we had 7311, which was your CAGIT distribution, 7312, which was your CEDAT distribution, and 7313 was your COIT distribution. I am making the general assumption that these balances have nothing in them because as you receipt them in, you're distributing them out to leave a zero balance. If you do have a balance, then we need to deal with that, but I'm assuming you don't. You will stop using those in January, and we are going with new funds, and we put them together, so these are all new. 7330 will be LIT certified shares. 7331 will be LIT public safety. 7332 will be LIT economic development, or the edit monies. And right now we have one fund, 7333, for your LIT special distribution. As you know, the legislation changed, so in the future, if your trust balances for your local income tax at the state level exceed 15%, they are going to do a special distribution. It used to be 50, so we're assuming it's going to happen more often. Since they did the special distribution in 2016, it may take a little while to build those balances back up, but that's something you can kind of look forward to in the future. So we did set up a fund for that. If we need to adjust that in the future, depending on whether there are any, like this year there were restrictions on it. I don't know what's going to happen in the future, but if we'll deal with that when it happens. And I think, unless I missed one, Those are all the changes. So go ahead and take a 20-minute break. Think about this.